Hi everyone, welcome to TCM Education, the trading day of Friday, June 20th. We had an early morning recap, and we were in a situation where the market kept up 0.5%, started to trade higher. This is the S&P 500 price action in the morning session, early session. Since then, and I'm talking about even before 10 a.m. And now it's 10 minutes after 11, so basically an hour and a half later things have turned around and returned lower, and the S&P, which was up 0.5 or 0.6 at one point, is now around the around the zero number, like down 0.16. The Qs, which were way stronger, is down now 0.5%. So we'll see in a minute which stocks turn around for the Nasdaq. Again, the Qs down 0.5% after starting the trading day. You'll see in a minute. The price action in the Qs, and again we started up 0.5%. Now we're down 0.5%. Not very, let's call it a representative for the price action in the Qs. When we start up, normally we expect a continuation. I don't know what triggered this move lower, but evidently I'm looking at Google down 2%, Robinhood down 2%, Taiwan Semiconductor down 2%, Nvidia, which was not so bright, down 1.3%, Amazon down 1%. So let's bring in the QQQ. So here we are. That's the let's move to the 5 minute, because we're looking at an ETF. And this is how we traded. You see, guys, the gap up. Basically, we closed at 529 on Wednesday. Yesterday was the Juneteenth holiday, and we started with a gap up, moved lower, obviously closed the gap and continued lower. And if we're looking at the drivers for this move, clearly, if we're looking at the Nasdaq leadership, Google is down 2.6%. We'll check the chart in a minute. Robinhood is down 2%. That's Taiwan Semiconductor, Nvidia, which means the biggest sector and most important sector, semiconductor sector, is down. That's what's triggering. We have Palantir down, Micron, which was positive, down. Tesla started up more than 1%. It's down. Who stayed up? Have actually, let's see, energy is up, and surprise, PayPal is up 2% and it started flat. So maybe this is a time to look at PayPal. You know what? Let's take a look at PayPal, and then we'll go and look at other more important stocks. So that's PayPal. You can see the move here. Let's move back to the 2-minute bars. Basically, there is a potential breakout trade in PayPal. The problem is that we're looking at not the best trading market. So again, the stock is moving sideways. It's after a 2-day pullback, including one big red day that was Wednesday, but we are up nicely. I would have to say that, looking back at the chart, this 70 reversal using only 25 cents of risk would have been a good trade, really. Take a look at this reversal. For entry 70, support is 69.75, worst case scenario 69.70. So that's anywhere between 25 to 40 cents of risk, and the target here is I would say at least 70.50. Keep in mind that we're looking at a stock that's not like booming, doesn't have like an amazing daily as well, and not to mention that the market, which is, I don't want to say dropping like a stone, but it's not a positive market. Anyway, we look at it. That's regarding PayPal. Now let's take a look at the losers, and I'm talking about Google, down 2.5%. So that was the close on Friday. Basically, we opened and moved higher in Google by maybe 0.5%, then turned around, created kind of a bear flag formation and dropped, probably on some news later on. We can check on that. So that's definitely a weak stock today. And with regard to Robinhood, there's so much profit taking opportunity there. I mean, the stock is at near all-time highs, which is the IPO day. I think it was 85 or 83. So the stock is, if you look at the daily chart, you'll see an amazing winner over the last 2 months. So some profit taking here in Robinhood is on the table. To me, Robinhood is still a long play, no matter how big the pullback is. I'm not looking at this point for a short play. Now let's move to the 4 stocks that we covered in the morning session, and let's start with our big pick, which was Kruger. And again, the stock reported earnings. I forgot to post the earnings calls early in the morning. That's because of the holiday. Anyway, you can see the big gap. This is earnings, the earnings gap in Kruger. The stock started up 4 to 5%, and a clear uptrend with beautiful reversal plays, including this 69.50 winning trade. That's to me the winning trade. A round number, clear support at the 69. I mean, if you observe the clear support at the 69, you can enter. You don't need to wait for 69.50. You can enter very, very close to 69 and buy it maybe at 69.10 or 69.15. Worst case scenario, you lose 15 cents. Again, if you observe it. If you don't observe it, a clear entry will be here. Like I said before, at 69.50. It's doing very well in terms of risk reward. This is actually the only one trade that I see out of the 4 that I was talking about that's doing well. Another one that's doing well, but it's not an easy trade, is OSCR. Let's bring it in, OSCR. And the reason why it's doing well, it's that many articles have been written about this company lately, including one in Barron's, which is a very important media for investors. Anyway, amazing volume. You can see the stock is trading 38 million shares. 38 million shares with not even 2 hours into the trading day, and the day. Take a look at the chart. Okay, you can see that Wednesday it traded 49 million shares, but that was for the whole day. I think we're going to move way above this this number. Now the question is, where can you find an entry point in this stock? It's very volatile, and if you're not 100% watching it, you're not going to find an entry. It just broke 20 a couple of seconds ago. Amazing support at 21.75 if you're watching the chart. So again, those reviews are not per se for waiting for a trade, because this review, thanks to YouTube, is only 15 minutes long. So we cannot afford to waste 10, 15, 20. Anyway, we can wait for a chart for a trade 10 minutes, and then we'll have to close down the video, because we're going to go over the 15-minute time frame, which is banned for our channel at this point. I mean, things will improve later, so I hope. So it's a good pick, but not an easy trade because of the volatility. And again, the trend is clear with regard to an entry point. It remains to be seen where is the next entry point in this stock. Now, there was a potential entry point on this reversal here at the VWAP area. You can see that there was a spike down, though. That's in retrospect, things are easier. whatever, if you can see and observe, those channels tend to repeat themselves. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 15 minutes. This is a half an hour channel, sorry, where the stock moves up from 10 to 10.30, from 21 to 22.50. That's $1.50 on this move. So keep an eye, those who are will be watching OSCR. If you're not watching it, watching this video and you're not watching OSCR, maybe it's going to be too late, maybe not. We're going to analyze it anyway into the close. Two additional stocks that I was talking about are SLDE. That's the IPO from from Wednesday, because of the holiday. I keep thinking about it was a Friday. So again, if we're looking at the price section here, what I don't like is, hold on a second. First of all, what is the trend? No trend, no trade for us. First, then take a look at the volume. This is super disappointing. The volume on a second day IPO is 1.2 million shares. That's dismal. I'm ignoring the spreads, but you cannot trade. I mean, you can trade, but that shows one thing: no institutions are taking part. One, no retail traders are taking part. I mean, if the stock is not gathering volumes and excitement, one day after the IPO, it's in a way disappointing. Keep in mind, it's not a Bitcoin stock. It's not a AI stock. It's a insurance. I don't know how well it was received, or it will be received. Anyway, what's disappointing here? The only parameter that I'm looking here is, other than the trend, is volume. We're not getting it. I'm gonna throw it out and look elsewhere. And the fourth name was this small cap, GRR, on a huge gap up. The stock is up double digits. Now, again, when the stock is up double digits, despite trading a very good volume, spreads open up. You can see that the spread is 20 cents on a $27 stock. That's nearly 1% you pay for the spread when the stock is moving. So there is a lot of risk involved. So you cannot trade it with 1% stop loss, because 1%, the spread is 1%. This stock is liable to take you into risks or anywhere between 5 and 10%. But let's take a look at potential entries, and you can see that there was a very nice move higher. We're getting closer to the 15-minute limit again. Unbelievable. So a potential move higher, then the stock moves sideways. Then there is an option to capture it at 26. 25 is the support level. So anywhere you buy or enter, you need to use or must use this 25 stop loss. Now, can you enter at 25.50? Yes. You need to take into account slippage then. So again, not an easy trade. These stocks that are up a double digit, and this one is up 45%. So huge news, very important news. Volume is great. So there's a huge pickup in volume. That's actually very positive. Take a look at the daily chart, guys. Huge pickup in volume. That's positive. Let's keep an eye on it, and maybe we can find an entry point later for this stock. You can see the pickup, the bar, the volume. And I have another stock that's maybe worth watching, SRM. I won't be able to show it here on the chart because we're running out of time with this limitation. Thanks for being here. Please share this video with your friends, and we'll see you in our next video in about 2 hours.